How to think like a trader. Hi, it's Charlie giving you Wednesday's video. I hope you're very well. So I've put a few bullet points down here. By all means, this is not an exhaustive list, and if you want to add to it in the comments box below on the YouTube channel, then by all means do so. So I've written a few comments down, notes down here, because thinking like a trader, it's something which seems very natural when you've been trading for years, but I forget that newer traders don't always think like a trader. So let me give you a few bullet points here and we'll run through them. So starting off with, a trader assesses what's right about the trade, but also what's potentially wrong about the trade. Because any trade you take, you should assess both the arguments for taking the trade and the arguments against it. Okay, if you're just technically mechanically trading a certain pattern, then you don't have to do anything, you just follow a pattern. But what I'm talking about is the more bigger picture type trades. And so there's always an argument for what might be the right thing to do with a trade, but also about what's wrong. What I find is that newer traders tend to do is all they look at is setups, and then they worry about their targets afterwards, and they don't necessarily always assess what's the flip side to their trade. Not that you want to exit your trade or not take it, but you should at least be able to assess the whole picture there to come to a conclusion and say, okay, yes, I understand the risks to my trade, and that's where it might help you with stop placement, for example, and also having a plan B. Well, what if I take this trade and it doesn't work? Does that mean that this market is actually doing something else? And in which case, maybe I should be doing this plan B. So that's what I'm coming to with regards to assessing what's right and wrong, because it's not that you don't take the trade, but if it doesn't work out, does it mean that the market actually wants to go and do something entirely different, and you could actually trade that different event? A trader shrugs off missing out on an entry. It happens all of the time. You might have chosen a level that you want to buy at, let's say, in a market, and the market might just get close to your buy zone but doesn't quite get there, and then you miss out. It's fine if you're a breakout trader, but not everyone's a breakout trader. You might be a pullback trader. And so you have a plan and it just doesn't execute. And I've got a good example of that from yesterday. Yesterday, during the day, I had shorted early yesterday morning, but I was looking for an additional entry during the day somewhere down here, around about 119. And on this little bar here, it went up to, the euro dollar went to 118.99 point something. So it was less than a pip away from my order at 119. and of course then it fell away. So you can look back at trades and say, oh, you could have just gone in a little bit earlier. Well, yeah, but you have to pick a level somewhere. My level was 119, put the order there, never got filled, and then just gradually came away. But there's nothing wrong with that, and that's my point. Whereas a newer trader won't shrug it off. They'll get angry with themselves, frustrated, maybe even chase the market and then start coming in lower down. Well, that's all very well with the benefit of hindsight, but what if you got in lower down and then it came all the way back up? It could skew your risk, and certainly it could skew your risk reward overall as well. So there are other factors to take in place there. And the one thing to always bear in mind when it comes to missing out on an entry, because it's going to happen, is that you should always say to yourself, at least I got my analysis right. It's a trick that I use with my traders, just to give them that, give your mindset that release to say, well, actually, let's take a positive from this situation. Yes, I didn't get filled on my order, but the positive is, well, my analysis was correct. So I'll give myself a pat on the back for that. So that's something you can do there. But a normal trader, an experienced trader, will shrug these sort of situations off. A new trader will be looking for all the reasons why they should have got in at a different level. There's not necessarily going to be loads of reasons why. Just accept it for what it is. You've got a strategy, you've got a level, and it just didn't get filled on that occasion. Okay. A trader assesses what the masses might be doing at any one time. So again, I'm always assessing what the masses are doing. So coming back out to a daily chart. What might the masses be doing? And when I'm talking about the masses, I'm not just talking about retail traders. I'm talking about the funds out there as well. What's being written in the financial news as well. So I'm trying to take all that on board as far as the overall sentiment towards a market is concerned. So assessing what the masses are thinking or doing is important. So at the moment, we know the bond market, for example, has got rather stretched. Yeah, so we know that, and we know that those rising bond yields were a real issue. And so you do know when you get to an extreme in sentiment that actually that bond market sentiment might well have just been peaking as far as the pessimism towards that is concerned. So in the very short term. So it's just one example there. So I'm always trying to assess what the masses might be doing, because generally I want to be on the other side of what the retail traders are doing. And when I say retail traders, by the way, I'm a retail trader. I trade from home. So that classifies me as a retail trader, although I'm a professional, really, because I've been trading all these years and I run a fund. But I still trade from home, so I can easily classify myself as a retail. I don't work out of a bank, do I? And I don't work out of a London office or anything like that. So, but yeah, trying to work out what the masses are doing, the uneducated, lesser educated retail traders out there, and that is the majority. So what are they doing? What are they likely to be doing when, especially on a day like yesterday, when the euro dollar had a big down day, Kiwi, big down day yesterday. So what are they likely to be doing on these sorts of days? So always try and assess what they might be doing, because normally when a market's having a big down day like that was yesterday, the retail, they're buying, because they're thinking, oh, it can't possibly go any further. My stochastic indicator is oversold, so it must go up, and then it just keeps going. So when you do get these big down days, the masses, you've got to understand, realize, is they will be going long. They'll be seeing this chart. If I take this down to the hourly chart, look at that beautiful chart there of the Kiwi dollar yesterday. It can't go any lower, and that's how they think, and so that's where they get trapped. So we try to use that. I try to use that to my advantage as well. Always just trying to assess what the masses might be doing. It's not that at any one time that the masses won't be on the short side. There's still going to be plenty of people out there who will have been on the short side. I'm just talking about the majority. We know that 80% of retail traders lose money. So I'm talking about them. I'm not talking about the 20% who do okay. So I'm talking about the general lesser educated traders. Now, a trader looks at the fundamental backdrop if needed. Again, I've put if needed because, again, if you're sort of technically trading the markets, then you don't really need the fundamental backdrop. But if you're trading on the larger time frames, then it's just useful to know what the fundamental backdrop is. But again, it's not imperative, because you can get really muddled up in fundamentals. But a rounded trader will at least be aware of interest rate differentials and things like that if you're trading currencies, and how one currency is trading not against just one other, but against a multitude of different currencies. So it's not that you have to be understanding what all the central banks might be doing or might not be doing. Although, again, it's still important to have some sort of knowledge of what they might be up to. So, for example, we know that the US at the moment is doing far better with the vaccine rollout, their economy. They've got all this money being pumped into the economy, and so their economy is much more likely to be doing really well over the eurozone. So we know that there's a differential going on there, whereby the eurozone is lagging. Its economy is lagging at the moment in relative terms to the US. So whereas the euro was actually benefiting last year, as we can see, the euro against the dollar so far this year has not been, and so that's just a fundamental backdrop there. A trader always assesses their risk. Always, a proper trader always assesses their risk. They don't just take trades and don't assess, well, how much am I risking on this trade? So a trader will always assess their risk. So simple one, but one of the most important. A trader will capitalize on winning trades. So a good trader will get into a winning trade and then might add to the trade as well and manage it well. So a good trader will capitalize on their winners. And a good trader doesn't care about win rate. All a good trader will care about is profitability. New traders obsess about being right and about having high win rates, and therefore they get marketed to by marketing companies who know that they're vulnerable and that they want high win rates. And so that's where new traders are. So that's the headspace that they're in. But an experienced trader doesn't care about stuff like that. They know that they can have a 40% win rate and be highly profitable. So, but of course, a new trader might not be ready for a 40% win rate strategy because from a mindset perspective, they've got to get used to being wrong 60% of the time. So, but all I'm laying out here are some bullet points as to the way traders think and how to think like a trader. So I've only given you a few there. If you want to add to this list, by all means, pop them down in the comments box today. And hopefully that's given you some food for thought, because certainly just on my list there, some people watching this video might think, oh yeah, I need some work on this section here or on this section here. And that's what these videos are always about, just giving some food for thought in a quick 10 minutes or so to give you some ideas on whatever the subject might be. As always, give us a thumbs up if you like the videos and subscribe if you don't already in order to make sure you get alerts when our next videos come through. Take care for now. I'll see you on Friday for live trading.